The Bank of England meets on Thursday, and over the last couple of weeks, expectations have been fluctuating given the data that we have seen from the UK economy, but also some comments that we've had from various Bank of England policy makers. That means that this meeting is technically live, but it's still undecided just how the Bank of England is going to go. At times it's looked as though a price cut is heavily priced into the market, but market expectations have been pared back somewhat over the course of the last week. We had some decent PMIs, some strong jobs data from the UK as well, and now with the extra uncertainty that we have with the coronavirus in China and the impact that that's having on the market, expectations for an interest rate cut at the meeting this week have been pared back. Currently they lie just above 50%. Now, just to put that into perspective, when market odds are below 70%, it's quite uncommon that the central bank actually does move, whether that's a rate hike or a rate cut. Now, that's not necessarily a line in the sand per se, but it is what we typically see when the odds are around the levels they are now. The odds themselves would suggest that we're looking at a coin toss in terms of whether we'll see a cut, but like I say, that's not really how this works out. What it does mean, though, is that the voting is likely to be tight. We have 9 monetary policy makers, 2 have previously voted for a rate cut, 2 more over the last couple of weeks have suggested that if the data doesn't improve, they would support an interest rate cut at an upcoming meeting. So that suggests that the voting could be 5-4, 6-3 in favour of holding for now. Now, that would actually be beneficial in terms of what we can expect going forward, because while that does suggest the numbers are tight, given the passing of the election uncertainty in December, the Brexit uncertainty, we now know we're leaving later on this week, the removal of some of that, the cloud of that uncertainty does enable the economy, you would expect, to bounce back to some extent. That would suggest that the data could potentially improve over the coming months, alleviating the need for the Bank of England to be cutting rates when they are already at extremely low levels. But that hasn't stopped policymakers talking up the prospects, as I say, at this upcoming meeting. In terms of what that's done for the currency, we've seen it floating around the 130 level. At times it's pierced below, at other times it's held above. At the time of recording, we're trading around that kind of 130 level. Now, because the odds are where they are, if we do see an interest rate cut, you would think that could potentially lead to some weakness in the pound. If we see a clear break of that 130, then the next level below that's of interest is 128. If we don't see an interest rate cut, then it really does all hang on the language coming from Mark Carney and the rest of the Monetary Policy Committee in the statement alongside the decision itself. Now, we have to remember this is Mark Carney's last meeting as Governor of the Bank of England. He will be replaced in the middle of March, with the next meeting coming slightly later. Now, again, it's worth remembering here that while you could suggest that this may suggest that he is going to hold back on any major policy shifts, at Mario Draghi's penultimate meeting late last year, they did release another bazooka, and we've got other circumstances where policymakers have done the same. So we can't necessarily read in too much into the fact that this is Mark Carney's last meeting. But like I say, now that the dust has settled on the events of the start of this year, now that we've got some hard data to look at, I think the market view is that the Bank of England will hold off at this meeting, even if the vote will be closer than it has been previously.